There's been a lot of comments asking for a video about PRCH Group as they just had earnings. And let's take a look at the presentation used and I will walk you guys through it. The whole earnings was about an hour long. There was a funny hot mic moment and I was recording it and I was doing commentary over. But unfortunately after 40 minutes my recording crashed and I lost all the footage. So we're just going to do a faster version with the same presentation as management used, and I will highlight the important points and we will just walk through it together. So the stock market reaction was up by about 25% on the day after the earnings as they released after hours, and this can be attributed to a number of things, as you will find out in this video. However, I think that earnings was not great. Alright? In my opinion, this was not what I was looking for from the company. However, the market still reacted positively to mediocre earnings. Imagine how the market will react to solid profitability, because let's be real, that's what investors are looking for in these macroeconomic environments. They want to see profitability, they want to see solid balance sheets. People are scared right now. In the past we looked for growth and now we look for profitability, and PRCH Group indeed had growth. Let's just get right into the presentation. Alright, so presenters was the CEO, Matt Ehrlichman. He had the initial first word, and then Sean talked some about product velocity. No, Matthew talked about product velocity. And then Sean talked about refinancing, and Nicole held the part about software. And of course, massive disclaimer about forward-looking statements, and I think Matt said 3 times in the earnings call that he thought that the stock was priced too low, that the market didn't reflect the true value and understood what PRCH Group was trying to do. However, it's gonna be like that in times like this, and those investors who wait will be rewarded. And I know that in the end Matt also acknowledged the long-term investors with the thank you. I wish I had a clip of it that I could edit in, and I wish I could edit in the hot mic moment as well. But basically the first sentence from Matt's mouth was talking about some solid and nice business progress from PRCH Group, talking of course about the highlight in revenue, 37% in revenue growth. And if we divide this up, we will see that software was basically flat in the declining house sale market. So even with less houses being sold, they were able to stay flat. So this basically means that they're taking market share. We can extrapolate that from this information in the earnings call. And this was the big disappointment for me, EBITDA loss. And indeed, I think that management did a good job addressing this, as they told us that, alright, it's due to weather events, that this type of year typically has the worst weather, and then in this later half we see some better weather, but there's some risk management going in there as well that they addressed as well. But solid performance in terms of revenue, and when we compare this to the market expectation, the revenue was in line with the top segment of market expectation. And forward-looking statements here was that they expected to be profitable in the second half of this year, although the market disagrees with this and has losses as predictions. So there's potential for a massive beat here in the second part of the year. So HOA, this is the home insurance company. They have some index here with comparing them to other underwriters, but they had an amazing year. And I mean, they have this competitive advantage where they have the data from the surveyors when they look at the properties, doing inspections from moving out and all these different software solutions that they have. So they have the possibility to utilize this data set to write more accurate policies and have premiums being more reflected in this, although they don't really have the ability in every state to use this data. But it's a competitive advantage. And I mean, the insurance industry, it's so old, it really needs innovation. And we see some other small actors such as Lemonade as well trying to innovate with ease of signing up, etc. But let's just look at the key updates here. So insurance strategic initiatives are on track, and they talked a bit about phasing out some high risk policies here, 37,000 of them. And then the reinsurance industry has hardened a bit, and this was a main reason for the lack of profitability in this case. Also commenting on refinancing the midterm loan here of unsecured notes to secured notes, and having really long payback time here. So October 2028, just a lot of time on their hands to generate a lot of money, grow the business, not having to worry about risk from increasing interest rates. And that was also the impression that I got about management and the way that the company is run, is that they don't like risk a lot and they manage the company very conservatively. For example, we can see them talking about taking off risk from underwriting policy by using some sort of exchange in that case. And I think that this is a good approach. The market will like this once they start implementing this, because investors don't really like risk. Investors love predictability. So this is something we will see from that going forward. Here we see a slide about what I just mentioned. Filed application to form a reciprocal exchange with TDI. And regarding timeline, Matt commented on this that he still believes this will happen in the second half of this year, and that timeline has not been shifted. That was basically the most important part of this part of the earnings call. And talking about results here and also guidance, we just learned that, alright, they think the market is not reflecting the true value of the company. We got that highlight in this part as well. But we see here a breakdown. So total revenue increased 37%, and cost of revenue decreased by a little bit. That's just amazing. We can also see that the corporate expenses was managed very properly and reduced by a lot. And when I looked into, I saw another highlight. They didn't even bring this up, but when I looked at the earnings, like the filing to the SEC, I saw comparing the first quarter of this year to the first quarter of last year, they had bought back 1 million shares, so 1 million shares less that's out there. So every share is just becoming a larger part of the total ownership of the company. So this is great news for investors in the long term. I think it was 97 million first quarter last year and 96 million in this quarter. Rough numbers, of course, there's some 100k on each side, give or take, but roughly 1 million shares less. This is great corporate governance. Of course, talking about written premium increasing as well. And here we have revenue by segment. So we see that insurance was the main driver in revenue, and then we see this little decrease here in vertical software segment. But as I commented on earlier, we see that moving services impacted by industry home sales, which increased by 26% the first quarter year over year. So, and software subscriptions flat, as I commented on earlier. But this headwind that we're seeing right now in the home industry, and I mean, I can totally understand this. Let's say you live in America and you have a fixed rate at 3%, and you were thinking about selling your home and getting a new one, and all of a sudden you get 6% instead if you want to buy a new home and sell your old. That gives incentive to stay in your old house and just wait it out, but business will pick up. This will not last forever. There will come a time when the market turns around, and by that time the new applications, the new software, the increased market share, the increased amount of total order value, total value per customer in the software segment will just pick up massively, and it will be very bullish, in my opinion, for long-term shareholders who stick with the downtrend, who reap the rewards of the uptrend. And then, of course, adjusted EBITDA by segment. Not very happy about this insurance segment here. See the loss, slight loss from vertical software segment as well. But the highlight in this slide is corporate expenses, where we can see that in terms of total revenue, these are fantastic numbers. Revenue is growing by a lot, and corporate expenses is not even close to growing at the same pace. They're having rigid controls in place, is what these numbers are showing. So of course they choose to highlight this in the investor presentation. And then reiterating the 2023 guidance, they talked about profitability in the second quarter. So that was the guidance in this case, and I think they're being a bit conservative on the numbers as well regarding revenue growth. 20% revenue growth. I mean, there's potential to be some more, but indeed management is being conservative. And regarding balance sheet, the balance sheet is mediocre for PRCH Group, but the refinancing here made it a bit better, in my opinion. It gives flexibility, and that extra cash infusion is really needed in times like this. And we have extra cash, you can afford to wait, you're not pressured into doing bad business decisions. So this is good for the company. This is less risk for us as investors. And they also commented on this share repurchase program, and I really liked this part where they said that we will do what's good for the shareholders. That's us, guys. That's us who sit and wait. So 1.4 million shares for 3.1 million American dollars. Average price here of the repurchase $2.2 per share. So repurchased at quite a bit higher price than current market values. And we also saw Matt doing large buys for himself a couple of months ago, and after that the stock basically rallied on no news to $3, and then they had some bad earnings, and now they have some mediocre earnings, and it's at $1 here. But these mediocre earnings was enough for the market to rally, basically. I think they priced in something much worse, something that basically wasn't there in this case. And for the next quarter, of course, highlighting profitability, the potential for larger gains. Talking about the issued new 333 million senior secured convertible, so repayment of existing notes. They basically have a breakdown of what this financing will be used for. So as you can see, they don't get the full amount. There's fees, there's the issuer discount. Remember, I did a video about this a while back, talking about buying this at 95% of par. So this is what this means, breaking it down. All right, this is the cost that they give in discount. Remember, money in the future is worth less than money today, basically. So this is reflected in this slide. So this was the chief financing officer having this discussion, and I think they all did a good job. I think they all sounded very confident in their business, and this gives you strength as an investor as well when you see that management is not stuttering, they're not looking everywhere and being flaky, but just straight to the point. I'll talk a bit more about some Peter Lynch style insights in the end as well when we look at I'll just do a cover of the questions asked, talk a little bit about what I see regarding the analysts that are currently covering this stock. It's like right out of the book One Up on Wall Street almost. We can draw a lot of parallels. So Chief Operating Officer Matthew Neagle talking about product velocity was the buzzword in his presentation, and this, I'm not into doing development of products or being a project manager. That's not something I do on my day-to-day. So if somebody who's on that side of business would like to explain product velocity a bit more, it would really help out me and the community. So please post that in the comments below and let's straighten out that buzzword, what it really means. But talking about KPIs here, remember I covered this briefly earlier, that average revenue per company grew, important KPI. So as more and more users start to adopt software, we can expect that there will be larger revenue per new customer as well. So in terms of percentage wise, we see them commenting on that this is an increase of 15% from the first quarter last year. So that's just terrific. And average numbers of companies broadly similar to last quarter here, but 20% up from the same period last year. And these are just some KPIs, the most important key indicators. And then of course the insurance segment, talking about premium. I think they have a slide a bit further down about some strategic priorities here, of course, but also about how they were able to use their data. I think that Nicole talked a bit about that. So insights driving insurance pricing. They talk about how they can combine claims history and the unique data here from the software that improves the pricing model. And they did not talk about exactly what data they used, because they claimed that this was something company secret that they needed to protect. Once again, being overly cautious in this case. I don't think it's super dangerous to talk about what type of data you use in your pricing model, because as a company that has this first party data directly from software, that's your moat, right? That's the moat that they have. It's really difficult for other companies to just straight up replicate that data set. And with GDPR, even going forward, if they were to try to sell it, I don't know why they would, but if another company uses this third-party data, it basically can't be done in the same way. It's illegal now, so, or will be. So they still have this moat, all right? In my opinion, the data that they get from their software platform that they can use in their pricing policy, it's first-party data, consented, right there for them to utilize, for them to do BI on, and just improve the quality of how they price their insurance. So I think that accuracy can improve a lot here as the model just gets better and better. And I don't know how AI will be able to improve this and help them with the pricing model, but I'm sure that there will be some software package that they can purchase from some company to help with this, as well as the amount of data continues to grow from more companies utilizing their software. I think this is just a circle of improvement, basically. And here we have the expanded home insight. This is the slide I was hoping for. We see water heater locations, something they can use in 9 states, and then also insights about roof, floor, plumbing, bathrooms. Remember, home inspection software. If you've ever been on an inspection, I've been when I moved from Copenhagen, you know that there will come a guy, he will have like an iPad or something, he will take pictures of everything and write comments, and it's quite a large report. It takes like half an hour, and this data, insights, roof, floor, plumbing, bathrooms, it's a competitive advantage. So approved in 3 states right now. As the number of states that approve this increases, this moat continues to grow. They can continue to write better policy, and this value generation will have to be recognized by the stock market at some point, and by that point it will be good for investors indeed. So business to business software development regarding mortgages, created a bundle, fluffy POS plus LOS package for mortgage brokers to launch 2 new products. Of course, this is a cross-sell as well into this type of business. If you can generate leads, it's really tied into this, and it's a first-hand chance at customers once they utilize the software to maybe do an inspection that they want to move in or whatever it could be. This is just a cross-selling opportunity that's being highlighted in the earnings presentation. So some of the development here, they just touched briefly on this. This was not the most important part of the business, in my opinion. The core is still the home inspections here, and then being able to utilize that data to do the writing of insurances. Alright, and the new app, they launched this a couple of months ago, and it will be interesting to see how this develops, but too early to tell really. And I also really like this, talking about enhancing the consumer experience, focusing on adding value for consumers. That's a sign of a good business. Let's focus on how to solve a problem, how to make life easier for consumers, and by solving an actual problem, you will get rewarded if you manage your business in a sound way and don't overexpand and do anything crazy. So that type of language was much appreciated coming from management indeed. Here another slide on enhancing the consumer experience. And then closing remarks, Matt once again commented on that the stock price did not reflect company performance and that he thought that the company was undervalued. So quite interesting to hear that from management. And just some summaries before we get into the Q&A. And in the Q&A here, I wish I could take a clip from it. There was a hot mic moment, and there wasn't any famous analyst houses really, no big name brands in the call that were questioning management. There was a lot of smaller analysts basically, and in larger earnings calls you will see that the person that selects who does the question, they basically say max 2 questions per analyst, something like this, in those lines. And well, then the Goldman Sachs and Morgan Stanley, wherever they come from, just asked the two questions, but there was no limit here. So the first guy, he asked a lot of questions, and the second guy, his mic was on, and he was like, come on dude, you already asked like 60 questions, being a bit angry, and just saying it out loud, and it was heard on the earnings call. So I got myself a little chuckle in that case. But here we can draw a parallel to Peter Lynch and One Up on Wall Street, because one of the engines that propels the rocket ship, that is stock price, to the moon, is when we have institutional buy-in. And if there's no large analyst houses covering a company, it means that it's not really up there on the radar yet. And larger analyst houses, they really love safe bets, safe picks. It's much more important for them to lose 5% if everybody else loses 5% than taking a risk and losing 20%, because then their heads are gonna roll and money's gonna flow out of their fund and it's going to be bad for them. So rather lose a little on IBM than take a chance on a small cap stock. That's almost reiterating what Peter Lynch is saying in his book One Up on Wall Street, but I think perfect parallel here. So we don't see any big investor houses basically, and this means that once this company gets the stamp of approval from Wall Street and institutions start adding this company to funds, that buying pressure will propel stock price higher. The second part of the rocket engine here is the price to earnings, the earnings basically, seeing profitability. Once we see that profitability, the growth, and the growth in price to earnings multiple that comes from large institutions buying, then we have the earnings part of the price to earnings equation pushing upwards, and we have the increasing multiple from Wall Street demand also pushing higher. So it pushes from both sides of the equation, and that's when we have the opportunity to make a lot of money. So that was quite nice to see, actually, that there were no big name brands, only smaller brands asking questions in this earnings call. So I think that's a good note to end this video on as well. And I really hope that this provided value for you guys, and that you think I was able to summarize the earnings call in a good manner. And even though my recording crashed and I wasn't able to get any of these funny clips, I hope that I was able to tell the story about what happened in the earnings call in a way that was easy to follow for you guys. Alright, that's been it for this video, and as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.